In today's video, I want to teach you an excellent indicator on TradingView that helps you to discover if the market is trending or not trending. To add this amazing indicator to our chart, here we click on indicators and we search ADX. We add this one, ADX and DI, which is written by someone named Beikabu Oyaji, if I'm pronouncing the name correctly. Alright, this is the indicator, and as you can see, it's added here below the chart. First, let me increase the thickness of the lines so they can be seen easier. And let's change the color of ADX line to a lighter color so it will be more clear on the chart. Alright, we're done here and now it's better. This blue line is ADX, Average Directional Index, and it's a non-directional indicator and it only shows strength of the trend regardless of the direction, whether the price is trending up or down. ADX is usually plotted with these two directional indicators. The green line is plus directional indicator and the red line is minus directional indicator, and together they form a trading system that was originally developed by Wells Wilder. The ADX line is derived from these two directional indicators, and these directional indicators are derived from directional movements which are calculated based on the difference between two consecutive highs and lows. The formula and the way that these lines are calculated are a little bit complicated, so I don't get into more details, and in practice you don't need them and you just need to learn how to interpret them. In case if you're curious on the formula and calculations behind this indicator, you can easily search in the Google and you'll find it in many websites. First, let me explain the ADX line. I removed the other two from our charts so it will be easier for you to focus on what I'm explaining. As I said, ADX line is a non-directional indicator and it helps us to measure the strength or weakness of a trend. It doesn't give us any information about direction. All it tells us is that if the market is trending or not trending, and if it's trending, how strong it is. This is a valuable information for you to decide to use a trend following strategy or non-trend following strategy depending on the market situation. ADX line moves from 0 to 100, and Wells Wilder suggested when ADX line is above 25, the trend is strong enough to use a trend following strategy, and when ADX line is below 20, there is no trend in the market and no trend strategies must be used. Many traders in every market use 20 as the key level of ADX, and in practice also deciding based on this level provides us enough information about the market situation. But depending on your trading strategy and also volatility of the asset you're trading, you may need to increase or decrease this level just a little bit so it will better match with your trading strategy or the market that you're trading, which by testing the past data you can reach to an optimal level. As I said, 20 is more commonly used level and it's usually good enough to provide us information about the market situation. So when ADX line goes below 20, we say that the prior trend is weakening, and this could be part of a pullback and consolidation before continuation of the prior trend, like what happened here or here. And when this being below 20 continues in an extended period of time, we can say the price is in a trading range. And in this situation, non-trend following strategies must be used because ADX is telling us that there is no trend in the market. For example, on this chart, you can see that here the ADX line went below 20 and remained below 20, as you can see, and this tells us that there is no trend in the market. And if you look at the price, you can clearly see that the price is in a trading range. And when a breakout happens and a new trend forms, the ADX line goes above 20. And when we see the ADX line is above 20, we say that the market is trending and it's strong enough to use trend following strategies. Again, here you can see that the ADX line went below 20, which could signal us a deep pullback and consolidation before further declining, or in case if it keeps staying below 20, which in this case possibly is going to happen, it can signal us that the market is flat and a trading range is forming. The point is that whenever the ADX line goes below 20, it shows weakness in the trend, whether it's a pullback or the price is going to a trading range. Please pay attention. As I said earlier, ADX line is non-directional and it doesn't tell us about direction of the market. It only tells us if the market is trending or not trending. So when ADX is above 20, it can be a sign for either declining of the price or advancing of the price. And also please pay attention that direction of the ADX line is also important important in evaluating strength or weakness of a trend. When ADX line is rising and moving higher, it shows that advancing or declining of the price is strong. And when the ADX line is falling and moving lower, it shows that the prior trend is weakening and the price may go to a pullback or trading range, or a reversal may happen. So the further the ADX line moves away from 20, it shows more strength in declining or advancing of the price, and when it turns back and gets closer to 20 level, it shows weakness in the prior advancing or declining of the price. Alright, until now you learned how to know if the market is trending or not trending by the help of this ADX line, and also how to measure the strength of the current trend. And now by the help of these two lines, I mean plus directional indicator and minus directional indicator, we can discover direction of trends and potential changes that may happen. Actually, these indicators together form a trading strategy that helps us in direction and strength of trend. Wilder suggested that the first requirement in this trading system is that the ADX must be above 25 so that we can say that the market is in a trend. As I said in this video, we use 20 as the key level of ADX. So the first thing that must be confirmed is that ADX must be above 20, so that we'll be sure that the price is trending. When plus DI, the green line, crosses above minus DI, the red line, it's a buy signal, and when minus DI crosses above plus DI, it's a sell signal. Like any other crossover signals, these are also very prone to be false signals. For example, they happen in the pullbacks and not worth of trading. So we need to filter them. For example, we can use price action analysis, or we can use some indicators for identifying the overall trend and only taking the signals that are in the same direction with the overall trend. We have better and most accurate buy sell indicators that we can use instead of these plus directional indicator and minus directional indicator, and the most valuable part of this indicator is ADX, which helps us to know if the market is trending or not trending and to evaluate the strength of trends in the market. It's better to use plus DI and minus DI just for knowing the direction of the market. For example, when ADX line is above 20 and you know that the market is trending, so when you see that the green line is above red line, you can conclude that the price is advancing. As I said, the most valuable part of this indicator is ADX line because it can help us to know if the market is trending or not trending, and also it helps us to evaluate the strength of trends in the market. By the help of this indicator, we can easily identify areas of weakness and consolidation during pullbacks or more extended ones, resulting in trading ranges, so we can effectively switch between trend following strategies and non-trend following strategies. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.